Nilesh Shah of Envision, who joins in. Nilesh, what's your reaction to S&P lowering India's outlook to negative from stable?
Well, I think it is just a change in the outlook. Obviously, of course, it's a signal that if basically there is not adequate policy response, then we even have the risk of basically a rating downgrade. But I still think that kind of an event looks pretty difficult as of now. I think it's quite possible that you might actually see some policy response from the government. And I don't think this is something which was not known. And to that extent, I think the impact on the markets is really not going to be very significant.
Right, but Nilesh, we just maybe 3 to 4 minutes back had Shankar Sharma on the show, who said that we should just ignore the S&P rating, nod and move on. Would you say that that's going to be the large majority, that's the manner in which the large majority of people in the equity markets will react?
Yeah, absolutely, because what basically the rating agency has said is not something new. It's not something which was not known. In fact, if at all, this was something which was flagged off by the RBI maybe a few months back, and it got reiterated in the union budget as well as the subsequent credit policy. So to that extent, I think this is something which has been the common refrain of policymakers, of executives, of economists, and of investors. So I don't think this is something which is new. It's not something which has got freshly discovered. And so to that extent, I don't think this will have any significant impact on the market. The market is definitely going to take this in its own stride and move on.
One of the biggest worries also that we're battling with is negative capital formation, because savings are not really being translated into investment. Would you argue that it has less to do with tinkering of monetary policies and more to do with action from the government, and that any step in that direction would certainly be very welcome?
Absolutely. I don't think it's got anything to do with the monetary policy or the monetary variables, because I think domestic capital is available. And we are still having a very healthy savings rate of 30% plus, which I think is extremely enviable in a global context. So I really don't think it's about a few hundred basis points more or less. I think it's more of having a very stable policy regime which facilitates investments, and that's something which corporate India and domestic investors are pretty much looking forward to. I think that we see an extremely strong move in terms of a benign investment policy. You'd clearly see a lot of the domestic capital and savings getting converted into a very healthy investment rate.
Nilesh, just to take it back to the point as to how we will see some of these fiscal concerns easing, do you think perhaps post the fuel price deregulation, especially on diesel, as was indicated by the government on the parliament, that some of these fiscal concerns can also ease?
Absolutely. I think clearly over the extremely short term, basically the most important policy measure which needs to be undertaken is deregulation of diesel, and of course implementing deregulation of petrol in its true spirit. These are things which does not require any legislative approval. It just requires executive action. So I think that's clearly the most positive policy measure which can be undertaken in the short term. Of course, over the medium term, the big game changer in terms of fiscal deficit is basically the GST. And I think if that gets basically approved and implemented, then of course that has a substantial potential to ameliorate concerns about India's fiscal deficit situation.
Your view on the markets at the present valuations and the levels that we're working with, would you be a buyer at these levels?
Well, I think these are levels which have held up pretty well. 5150 to 5200 is a level or a band which has held out over the last 6 to 8 weeks, despite a lot of negative events which have happened. So we basically expect that it's quite possible that these levels could basically hold up. While the mood is negative, but you might actually see some kind of positive direction in the market if the government comes in with significant policy response to basically the current environment.
Nilesh Shah, thanks for coming in on the show with your perspective on what the ratings revision means for the equity markets and for investor sentiment.